Good morning, dear participants and speakers from the session within the Social Finance Vibe, which is in full swing. I'm Silke Müffelmann from Frankfurt School, and I will be pleased to moderate this SIFTA session on comparing fintech models for microfinance. I myself, I'm also very pleased because I'm the team leader of the SIFTA technical assistance for this EU project. And in Frankfurt School, mostly working on financial inclusion and social entrepreneurship. We will have 4 speakers. We will coming soon to our dear colleagues on the panel. Allow me to introduce our speakers. So we have Tala Legari, which is our global fintech expert. Tala has 22 years of experience in 30 countries across Africa, Asia Pacific, and Americas. He has also been supporting central banks in various fintech initiatives and worked with international development agency. He was also a practitioner when we started to cooperate with Tala. He was still a CEO of a mobile banking service provider. And of course, he has been involved in his work in financial inclusion with Microfinance Association, microfinance providers. Then we have Ilka Maulavita, business director at Vaurus in Finland. Vaurus is a leading corporate lending platform in Finland, connecting SMEs and investors. Ilka has 10 years with the company and has been an integral part of building up the company's business. So it's very pleasure. And then we have the team of Clear Lending, Sergey Panteleev and Boris Ilinov. Sergey is the CEO of Clear Lending with more than 15 years of executive experience in the banking sector and fintech sector in Bulgaria. He is a co-founder of a technical solutions provider, Finbiz Technology, and now full involved in Clear. And Boris is the CFO of Clear Lending, also with over 10 years of experience and very long involved in the team. Before we go to the topics, allow me to give a quick overview on SIFTA. You have already heard about SIFTA in several of our webinars, and yesterday was also a dedicated session. Therefore, I will just focus on some specific topics. So, of course, the European Investment Bank is managing SIFTA. We have different type of services, the technical assistance services related to project advisory, capacity building, and market development, and the rating assessment and evaluation services with 2 different providers. Frankfurt School, we are leading the consortium with MFC and European Microfinance Network, and Fabea is a partner with us, and MFR is on the evaluation part. So SIFTA, the time frame is evolving a lot. We have a high demand. The time frame is officially until 2027, but we have learned that EIB is discussing to expand this time frame towards 2029. And what is also important, digitalization is a very important topic in our activities. And for example, in our workshop, we have been implementing since end of 2022. Almost 14% of the workshop are treating digital services, digitalization, and this will become more and more important. So that is sin further ado. I would like now to give the floor to Tala Legari to provide us an overview on how fintech models are evolving globally, which trends can be observed, and how development is shaping in Europe. Tala, the floor is yours. Thank you.
Thank you so much, Silke. Okay, fintech, as we know, fintech is revolutionizing the financial industry and paving a new way for financial institutions, companies, and individuals to manage and access their finance. It's not all about digitizing money and processes. It's about monetizing data, create value add from data, which was previously limited with available technology. Fintech holds potential benefits for individual businesses, especially the micro and small medium enterprises for their economic growth and securing funding. So here in this slide, so we can see fintech has various effects on different financial market activities, which includes payments and clearing, in settlement, deposit lending, in capital raising, market provisioning, investment management, data analytics, and risk management. For this session, we are only focused towards deposit lending and capital raising. So in terms of the global trends that we've observed in different parts of the world, so there are new emerging business models which were previously not available, which includes peer-to-peer lending platforms. So these lending platforms can be donation-based, reward-based, equity-based, debt-based, royalty-based. Then we have the mobile phone-based lending. So technically, the providers, they are using the mobile data and other valuable data from the customers and giving them collateralized based small loans. With that, we have buy now pay later models. So these models are typically used for purchases where the customer, they don't have the buying power. So for example, how buy now pay later works. So for example, a customer is shopping on an e-commerce platform, they don't have the money to buy, for example, a watch. If the e-commerce shop is enabled with buy now pay later model, so customer would simply check out with that model and buy that product and accordingly pay in 3 to 5 installments to the provider. So on the other hand, these models are also applicable for in-store purchases. Then we have seen mobile money credit. It's mostly, if you see, observe the African market. In Africa, mobile money, it's on the rise, especially in Kenya. So mobile money providers are collaborating with traditional providers along with licensed fintechs to come up with small or nano loans that are distributed through mobile money platforms. Then we've also seen different working capital loans that have been provided to e-commerce merchants for various inventory and other activities related to their businesses. Then we've also seen B2B marketplaces along with embedded finance and green finance. So technically, these models are provided by licensed fintech. They can also be provided by incumbents and other licensed institutions. These models can also help the traditional institutions to digitize their products and delivery channels. In terms of the market structures, since these models are comparatively new, they're not expanded at a global level. So the competition is very less, and there is a lot of room for providers who opt for these models, and they can capture the market easily. So in terms of the fintech development in Europe, what we have seen, microfinance is somewhat different in Europe as compared to Asia, Africa, and the Pacific markets. In the Asia, Pacific, and African markets, microfinance is typically used for poverty reduction by providing small or nano loans, whereas in Europe, the microfinance is typically concerned towards social inclusion and entrepreneurship. So, in terms of the fintech development in Europe, we've seen there is a lot of development for insurance, payments, banking and digital currency, wealth in capital markets, lending and mortgages. So, UK is quite the dominant market, capturing 56% of the funding, whereas on the other hand, Germany, Ireland, and Spain, they show only government-led subsidy rebounds. On the other hand, Netherlands outperformance is an exception, which is contributed to work by leveraged buyouts. Nordics, Poland, and Central Asian Europe remains underfunded when it comes to Series A and B funding. So the models that we've seen in Europe are loan servicing and origination, lending technology, B2B tech-enabled lenders and brokers, and communication and product construction tools. So in Europe, the emphasis on digitalization is aimed at achieving significant operational improvements, specifically to enhance client satisfaction and to streamline internal processes for better efficiency and expand into new markets. So we've seen in 2023, 26 million European SMEs employed around 89 workforce that contributed to Euro 487 billion value add. And in terms of the models that we've seen in Europe, so there are commercial banks. There is a rise of digital banks providing business and personal lending. This can include Oaknot. It's a digital bank, Starling, Revolut, N26, Monies. And for the P2B lenders, we've seen Mintos, Debitum, Bondero, Pearberry, Twino, Clear, Varus. And in terms of the buy now, pay later models, so we've seen Klarna, Afterpay, PayPal Pay Later, Scalapay, Alma doing a great job when it comes to in-store and e-commerce purchases.
Okay, thank you very much, Tala. This was like setting the global framework. Now we will have a concrete example in Europe, in the EU 27, the evolution of Clear Lending's journey, for offering fintech solutions in Bulgaria, a little bit also your lessons learned. I give the floor to the Clear Lending team, Boris and Sergey. Thank you.
Hi, Zilke. Thank you. Greetings to everyone and to all the attendants on our webinar. I really want to bridge to what Tala just said. I think we are breathing and living what was just said. And I'm happy to say that Clear was at the forefront of all this innovation happening in the Southeastern Europe region, more precisely Bulgaria. So us being a fintech is in our DNA. We are the first peer-to-peer platform in Bulgaria, already 10 years in operation. We were able to attract a lot of attention, not only on the market, but also from institutional investors and some local supranationals like the Bulgarian Development Bank, with the whole idea on the back that we are one of the players who is supposed to provide an alternative way for individuals and businesses on one side to attract funding and on the other side to diversify their investments. I really, when Talha was doing this intro of his, I just came back to this, I would say, joke that we have in the fintech. You are a banker, then you become a fintech entrepreneur in order to build an alternative to the bank, but ultimately entering or becoming a bank again. So the question mark, is this a loop? Is this really the happening or no? For 10 years, we are thinking that Clear has a space, a niche that has the potential to grow massively, and I think Ilka will prove it. I start to doubt myself if the dream of a fintech is to become a bank. Why? Regulation coming in heavily on banks, and we see more and more people left behind. It's, I think, the role of the fintechs to kind of step in and provide the needed funding and solutions to those left behind. And how we in Clear are doing that, I'll give the floor to Boris to explain.
Thank you, Sergey. So I'm going to talk to our latest endeavor, which is the financing to micro and small companies, to our embedded solution, which is now gaining a lot of traction. We see around the world, the idea of the embedded financing is to provide a solution where the customer is the end customer. We're talking about providing this option for receiving funding in their platforms where they are, for example, in their e-commerce platforms, in accounting and invoicing softwares, and many other places. Of course, the idea here is to be where the customers work day to day, where he opens the platform, where he can very easily receive an offer for funding he needs for his business, for working capital, for investment, and then to receive this funding. What is actually the special one when it's concerned the embedded finance is the idea is that we are using also the information which these platforms provide as a history for these customers, for example, the purchases, invoices, other data which they already have for their customer, which give the possibility really to improve the approval rate for these customers to receive bigger funding than, let's say, when compared to the traditional way of assessing these kind of companies, which really make it more inclusive in general, which is important, of course, for this already underserved types of customer, which is the micro and small businesses in general, because as we know, the traditional banks, they're not very interesting in these customers as the tickets are very small. So this is a way really these people to receive funding, which they're missing currently in many ways. Of course, we are connecting all of this with our core business, which is the peer-to-peer platform. So we trying to loop the whole thing together, where we provide the funding to the companies and then investors, which can support directly these businesses to our marketplace. And here, the possibility for synergies are very big because in general, also the businesses, they receive the funding, but they also can advertise to our platform to the different types of investors to share about their businesses. Investors on the other side are very happy first to receive, of course, the return that they will get to their investment, but also to support their local businesses, which they are in part of their communities, which really give the synergy effect which we are looking for. And of course, we're currently operated in Bulgaria. We're planning to make more integrations to go regional in other countries, but this is something we see now it's getting more and more interesting for many different companies like ours in whole of Europe. So it will develop more and more for the future for sure.
Okay, thank you very much. Very interesting how you have already evolved within the fintech space, yeah, from a peer-to-peer and this integrated embedded solutions and next to come. So now we are going north in Europe to the case of Vauraus with Ilka. And yeah, please also mention your journey, lessons learned, but also a little bit some differences, maybe from clear similarities. Vauraus, Ilka, the floor is yours.
Thank you, Silke. Nice to meet you all. Very happy to be here with everyone and explain a bit about our journey that I've been over 10 years already doing. It's always somehow very interesting to see and meet different type of more or less similar type of companies around Europe. I've seen many, so Nuclear, probably hand before. And there are a lot of similarities in the stories, how everyone have come up to and really embrace the challenge and the new opportunities, what comes down with after the banking regulation and how that's been tightening. And as Sergey very, very correctly put in, how it's been challenging for banks to do the lending for SMEs after the regulation changes. It doesn't seem to be getting much easier, but that's remark of ex-bankers as myself also been becoming an alternative banker and maybe back to banker. Who knows how this evolves? Just a little bit about how we see it happening in Nordics. There can be something coming, but if we just quickly, basically explaining the Vauras journey. So Vauras was established already 2011. We were the first peer-to-peer lending model for a platform for corporates. But there are also already like 5 years, 6 years before that, there was the first company that was built for consumer lending. So it's actually been quite long already in Finland, 20 years. Many things have happened. We have been always tried to not to build it to be fully open, everyone access, although everyone can go and invest, but basically try to very much target certain type of investors. In Finland, you have very open records. So we know what everybody are earning basically and their salaries. So you can go after tax information, then you can find those interesting people who perhaps could be willing to lend some money to SMEs to help the growth. So that's basically how everything has started. It has evolved quite a lot, but the biggest step is now happening in our company. There are over 7,000 lenders on the platform. The main business model still is with the peer-to-peer, but there have some asset managers from Europe already joined our pool, but they're still investing on the platform level. But we have now, it has been a journey basically. Some years ago already, we noticed that the strategy should be changed or at least amended. We noticed that with the peer-to-peer model, you can get a certain level, but we noticed that we must have a guaranteed bigger placement power, and that we can guarantee basically much more placement power for the ever bigger demand that we were seeing on our platform. It was a bit challenging after the especially after the crowdfunding law changes. It was a little challenging, ever more challenging for us to hit basically meet the demand. So it's already been a few years there that we started to take the business a little bit different way.
I have a question, Ilkka. The changes of the crowdfunding, what was it? Just for the participants to understand what made you the shift.
So yes, so there was this, even before this, we were convinced that we want to change this, but it was really accelerated everything. So we have the new crowdfunding law basically, which is Europe-wide, EU-wide, which makes it much more challenging basically to operate a crowdfunding. There were much more risks for crowdfunding management, the companies managing and the board even. So there were certain things, and then you needed to be much more, for us even, it meant system development that costs quite a lot to build this certain type of models and certain type of information, certain type of structures on the platform for investors to basically to make sure that first of all, they need to go through very long lists that we need to be very, very sure that everybody understands what they are entering into. So there are good things in there, but it also makes sure that it's challenging, ever more challenging to very much scale that type of a business. So what happened in Finland was that, to my knowledge, today Vauras is the only Finnish peer-to-peer platform existing anymore. So all the others, they either stopped fully or they changed their business model. But in Finland, that was very clear that after the crowdfunding regulation change, that happened, and it really shrinkened the whole business basically. So for us, it's pivoting towards the institutional investors, and especially the balance sheet, the direct lending. That's been the option for some years already. So we've been going through a lot of different type of investors, different type of credit funds, banks, investors in Europe, London, UK, US, and having many meetings and trying to find the perfect fit. In this industry, there's a certain historical way of doing it, where you need to have quite a lot of equity yourself in order to place it into these structures, where you have a junior, mezzanine, senior structures. You have different investors for different tranches, and that meant that for the structures were a little bit challenging for us and our resources to really launch. So even though we knew what was supposed to be done, it wasn't that easy to do. But we have secured, it has happened this year, we are now pivoting strongly towards the balance sheet and direct lending. We managed to partner up with a bank. We have now a bank's balance sheet that we can start using and building a big portfolio. So that's been a very much big lesson for us, and a very much achievement that we have managed to come up with. So basically, securing the funding, the right funding structure, and currently working together with the platform and the new direct lending pocket we will have. That is the way going forward, and we will see how much we will wait on each way of funding structure basically going forward. But it was essential and crucial for us to secure a bigger and more secure, and it comes with better, how you put it, when you have thousands of investors, contra you have a couple of investors, it's a much different work how you deal with all the investor base. It's much less, it's easier, to be honest. It's simpler. So
less investors is easier.
It's easier. Less investors, it's easier. It's much easier to work with
institutional, even if they are more demanding.
Institutional, and very much it's a partnership that you have with them. Okay. So it's different than you have investors on the platform. So that's been one of the key things for us.
Okay. And you have also brought something from the Nordics.
I have.
So
I
yes.
So
to see a little bit how it's going.
I think it's very much European situation when you have very much traditional the bank financing. The bank's always been doing the SME lending, but even much more in Finland. So basically, banks always been doing that. Only a handful of them. So yeah, 2 of the banks have more than 70% of corporate lending. So when those companies they get into regulation, the capital requirements, they don't want to or cannot do as much of lending. So that's a challenge for Finland, and it's pretty much the same in other parts of Nordics. Sweden has always been a little bit more innovative, and they have also the most active sort of neobanks, alternative shadow banks, if you like, that are very much looking forward to find different originators throughout the Nordics and start operating with, partner up with them, and start providing local funding for SMEs. But that's interesting as of today. This is very fresh. And coming back to this, how Sergei started the panel about the ex-bankers, alternative bankers, the banks again. It's what we see now in Sweden, for instance, is that Swedish regulator is actually now going very strong, demanding on these neobank, shadow bank lenders to apply for banking licenses. So they couldn't do it any other way anymore. So they would actually very much de facto need to become banks again. And if that's a trend that would go throughout the ecosystem, well, then we're back to bank financing. And then we are again with everybody with the regulation. And it's a challenge, as we know. So coming from there, even though we need to have the balance sheet and institutional investors with us, it's a pro to also have a possibility to work on a platform level, where at least for now you still have a different type of regulation, although it's pretty much been quite clear that there are certain powers who want to make a little bit, perhaps, make it more challenging to use and work with those platforms.
So that means the perspective for very small loans is going gray again with this trend.
Let's see if it works in a way that this, for instance, in our case, when we have now secured the bank financing, we have also now scaled product offering. So we had just to have loans, which usually are bigger ones. We also come up with new products. We already have been having the invoice financing, but now we will come up with this credit limit product, revolving one. For that, and that's for smaller companies. Like it can be a couple of thousands or a couple of tens of thousands. So now we have come up with the product that fits the need for the smaller companies, the really micro ones, and then we have the funding secured for that. So it can work in that way too. So the banks want to partner up with with originators and such as ourselves,
Fintech.
who can, fintech, who has the access and capabilities to check, to reach out to the smaller micro companies.
Sergey, do you see that also in this perspective? But for you, it's a little bit in the long term, this cycle.
Actually, it's in a very short term. We already did it. We are partnering with a local bank, Bulgarian Development Bank, that is looking for providers to do on lending and multiply the facility they allow to us, so we reach more micro and small. I think what Ilka is talking about, they're a little bit on the others, up on the lever where you are in the development of a peer-to-peer platform. I think for the micro and small, for sure, the co-creation and cooperation is the name of the game. So everything Ilka said is absolutely right. So you do have banks predominantly tackling the whole segment, but you still have companies which are underbanked and underfunded. They do have a banking relationship through their current account payment services, but for some reason they're not able to attract the interest of the bank to get the funding needed on time. And I think this is the crucial point: funding needed on time. So when you need a couple of thousands of euro, you don't have the time to wait for a month review or whatever it is. You do need it now, right away. And if your bank is not able to do it, probably it's a good idea if they have a partner who can do it for them and keep the relationship with the client. And I think what we are not seeing still, what is happening actually in the Nordics, and I think in general Western Europe, is that banks open up a little bit to this, I'll say, taboo team, in a sense, providing some of the relationship of their customers to non-banking players. And when I said that, there is tons of, let's say, exclusions. There is a competitor of ours in Germany, which is actually operating quite nicely with UniCredit. It's called Banksware and UniCredit practically bought a share into the company, and they're tackling this segment. And we see it everywhere, happening. So banks are starting to open up and understand that the limitation they have might be, it's a good idea to have an arm that is working on a market terms and arm's length terms from them, tackling this segment. So this is
so
one.
Let's discuss that. Let's go to the discussion part now.
Yes.
Ilka, please.
Sergey,
was it something you still wanted to,
No, I'm just saying that this is something I see it in a way. I see it in a way that there is a space for us. I do think that once you become more, how to say, mature and bigger in terms of assets, might be in terms of efficiency to start to build a balance sheet on your own, just to make sure that you can digest faster the demand that you have. But still, this thing that Bobby mentioned, investors looking for alternative investment will be on the table. So if all the models disappear of peer-to-peer, what will happen is that those people, they will need to find an alternative where they can get some yield different from the deposits, from the real estate, from the gold, from the crypto. And I think our models still have a chance to expand, and we see it with a lot of players out there. Simply, we need to make sure that our industry keep a good reputation, that we are a trustworthy partner where you can allocate some of your funding. And with the years, maturing of the market, a lot of peer-to-peer players, let's say, crashed down because they were not fair to their customers, and this is what we are tackling with. And also, we just saw that the market matured. Unfortunately, some regulation is knocking on the door, but I don't think it will be heavy as the regulation that banks are tackling with. But this is to protect the interests of the investors. And
exactly.
So Ilka, please.
Yes, that's very important to tackle and have the security for investors. The partnerships, it's all about partnerships. We all know it. It's impossible to do this yourself. It's you need to have two types of partnerships. First of all, it's to find those investors who are willing to they trust your company, they trust your underwriting, they trust that you are the one who can reach out to those clients that they also want to reach out, but much more efficiently. So that's the funding part. Then it comes down to structure. It needs to be the right type of structure, because for these investors, it's for us, it's a learning curve to really negotiate, to find, and not to settle to certain structures, but to find the right structure that we believe that we now have. And then you need to find to make sure that you have all the leads, that you reach out to the SMEs. To be able to do that, to the micro companies, to be a little bit bigger companies, you need to have the basically the delivery chain. You have to network, you have to have the presence. And in order to do that, that's a long work, as we all know. For so be a local player, being there for more than 10 years, you have had the chance to build these different type of partnerships. And the new thing that really comes for today is it's this embedded finance. For this bank who's providing funding for us, they see us to be embedded financer, basically, because they can embed it, basically, their financing through us to the SMEs and micro companies as they see it. And then for us, then we will go to lead sources. We want to partner up with those companies who have our customers as their customers in their systems. And I'm talking especially different type of accounting companies. In those accounting systems, all the SMEs, microfinances, most of them, they use some type of software. So if you are present in that software, you're meeting those companies on the moment when they are in need of funding, that's how you can have a huge reach. So connecting that, building an engine in between that can do efficiently the underwriting, bring more intelligence to that. That's then the very key work.
So Tala, how this trend is globally? So I think there's like a common understanding in Europe. So how do you see this trend in other countries? Yeah, so the fintech disappearing, coming up as neobank, and coming back. How to cater the small clients?
Right. So Zilke, if we go back in time before the advent of fintech and its different verticals, right? So in terms of the regulations that we've seen, so those regulations were built for institutional players like big banks, right? Safe financial services. When fintech companies, especially lending companies and other payment companies, they started coming into the market, so they were seen as a competition. Right, then the regulators, they studied the market and their own market and other different markets. Then they come up with a functional based approach to regulations. So in functional based, they looked into what the companies are offering, what impact it is creating in a specific country. Then they come up with a specific set of regulations, which we see, for example, P2P lending regulations, licensing applications, lending licenses, payment licenses, and things like that. Then further, when the market developed, now if we see, since we're talking about P2P lending, so I've seen in different part of the world when P2P lending was started, so there was a problem with the investor protection, right? When the market developed, then the regulators, they come up with a hybrid approach to regulation, which consisted of a bit of the institutional piece of regulation and a bit of the functional base, and they provided protection to investors so that these model can easily scale in different parts of the world.
And you mentioned also that you have seen some examples when we prepared the lessons for crowdfunding where there was no regulation, that there were a lot of bankruptcies, no? So that investors...
In some countries, for example, the country where I come from, right? So the regulator, initially they said crowdfunding is banned. Nobody can do it. Right? Then slowly things are developing, and they are developing some framework so that companies can opt for the licenses, and then they start doing these P2P lending in different models. Yeah.
But there are also countries in Africa where you mentioned that crowdfunding was not regulated, and then there were a lot of schemes. No,
Yeah,
so the
yeah, yeah.
selection, what Ilka
Still in
mentioned,
African market,
yeah, yeah. What Ilka mentioned for the
still in
EU,
the
there is now a crowdfunding regulation, which is important. So, and
yeah.
So we have the question. So we have a question from John Yankura. So credit-only microfinance have traditionally and had a niche doing quick turnaround loans to bank clients. This can be a reliable partnership for microlenders and banks when managed well. In addition, fintech microlenders have the capacity to manage client segments perceived as high risk that the banks will not touch. What partnerships have you seen that a win-win-win where the banks, microlenders, and clients thrive, and what are key elements to establish, sustain such partnerships? Yeah, so I'm not, you can also see the question. I'm not sure who would like to take it.
So I'll take this question.
Okay.
I'll take this question, Zilke. So, so I'll give an example of the African market, right? So in Africa, like I mentioned in the start, mobile money is quite developed in African markets. So before that, there were traditional lenders, which were commercial banks and microfinance institutions, including deposit and non-deposit taking, right? When the mobile money market established, so these traditional lenders, they started collaborated with the mobile money players, because mobile money is working on the telecom infrastructure, right? They have the telecom SIM, whereas if the conventional lenders, they reach out to a customer, so they have to put a lot of cost for customer onboarding and KYC and things like that. So they collaborated with the telecom providers slash mobile money in the African market. It's basically called a platform economy, similar to if we see Amazon. You go on Amazon, everybody is selling their things over there, and the platform is charging a fee, right? So the same practice, it's happening in the African market, and the banks are collaborating with the telecom mobile money providers, developing customized loan products, digital saving products, and they're using their own books and distributing those products through that platform, so that they can have enormous reach, which they don't have at the moment, right? And accordingly, they agree on a business model with the mobile money provider, and things work like that. And in parallel, in terms of the collection, they have their routine collection and recovery process in case where a customer they try to do default. Another important point I would like to highlight here is, since I'm talking about the platform economy, the M-Pesa in Kenya is one of the best in the world at the moment when it comes to mobile money. So what they're with their platform, they're also providing credit scoring technology. So, for example, their model is so developed, because I happened to visit them last October. I went to their office in Kenya. So the model is so developed, they are approving in 1 second, they're approving 60 nano and micro loans. So if you multiply it with 1 minute, if you multiply it with hour, or maybe a day, you will get the number. So it's so strong. And so it's the power of partnerships, right? So banks, they have understood in Africa that, okay, if we want to make money, this is the platform, and we are not competing with them. Instead of, they are harnessing their strength. So this is what I've seen in the African market.
Okay, so I had somebody raising the hand, but it's now down from Václav. He's not anymore there. Okay, so maybe since we are looking, thank you all, that we are looking Europe, no, and Europe microfinance. So digitalization is and this is also a little bit to the clear team, yeah, is a reality. So if microfinance, and we have seen microfinance providers which are evolving from a classic microfinance provider into a digital solution for microfinance, because what will happen in 10 years, yeah? So will be there really brick and mortar microfinance still happening? So, but digital to become for MFI, yeah, for a microfinance provider, yeah, to adopt a digital solution. You in Bulgaria, you are now, and also in Finland, you are integrating like lending into. You went the other way around, but now for a normal lender in microfinance to go, what are the steps in Europe, or what are the steps they need to do, yeah, to adopt, and what are the pain points or the recommendations you can provide, yeah, to go into this fintech adventure? Who would like to, Sergey?
I suggest Bobby tell us a little bit more, because he is into that. Besides being a CFO, he's also the product, how to say, developer guy in the company. And I think he has quite a strong opinion on what you just.
Yeah.
Okay, thank you, Sergey. So yes, what we see, the digitalization is getting more and more taking share of this kind of services, especially now with the future of the digital euro, which will start being more and more important with the next years. For sure, these are channels which are going to rise. Of course, still in when we're talking, especially for our region, I think still brick and mortar, let's say physical loans, will still remain, because just in general the economies we have different gray economics in some parts where still people are used to this more physical approach to this, but for sure digital will go more and more. And even when we go and see the traditional banks are changing, I think because of course the expectation of the customers now are bigger for more digitalization in this age which we're living now, from one side. From the other side, for all the competitors like us and all the other fintech companies which are pushing especially this digital approach, because in the end this is where we can actually create something which is alternative and more as a value to the customers. So this is developing more and more, and for sure, for what I see, it is important really to think first digital for the future in general, because this is the path we are going to in many ways. So, and I think again, what is important to be able to do this digital lending is, of course, data and information, where you can get in really good big quantity of different kinds of data for these customers by their digital profile, where actually you can take this data and assess it a proper way, so you can provide finally this funding to these small and medium companies.
If I may add,
yes,
quickly that, because I think Boris is spot on with that when talk about data, and we have entered this not the digital world, but this new intelligence world where you have artificial intelligence, you have beautiful tools that everyone can very easily actually use for data crunching. It's a very much different than it used to be. To need to come up with a different quite challenging data models to be able to do something that you can do now much less with much less work, and that will bring I think it will surprise us all how much more efficiency that type of intelligence brought in to the data crunching, to the scoring models that we can now build. We have collecting, when you collect more than 10 years, you collect all the data points from all the customers who come to you. You have a very big stack of data that you can actually start crunching into, and then you can start to do even ever more precise and correct decisions whether, who, and how to provide the lending. So then when I was talking about building the engine in between, and then you have the funding, and then you have the lead sources, be in the networks, be in the systems when you can access to the SMEs and microfinances, then it's ever growing, ever more efficient, ever better, the engine that you have there in the middle. So it's not easy, right? So we know that that's basically how you connect the dots and concentrate on building the engine, and then having the partnerships that will provide you the funding and the
Okay,
lead.
so that means to start in the machine room, yeah, to digitize the client data, start the digitalization journey from the inside, yeah,
Yes.
and then going to add digital elements. Tala, did you see globally MFI, a normal MFI, who became fully digital, and do you have seen that and what they have done?
I haven't seen a fully end-to-end digital MFI, right? So they may have some components. So they have like included integrated digital financial services to digitize some of their processes and outreach through DFS. So other than that, I've seen end-to-end non-bank lending companies. I've seen end-to-end digital. So they're providing micro loans and small loans, micro loans to individuals. So it's so there are two types: data analytical based on what data the company has of the customer, and the other model which I've seen is you just register on the app and you just request for the loan. They will give you a small amount of loan, but that loan would be with a higher interest rate, because because usually I've seen the short term loans, they have a high percentage of interest.
Okay. Anything to add? But for example, so an MFI, since I have been a practitioner in my first half of the professional life, so for example, that you partner with a fintech or you partner with an investor as a MFI, yeah, to bring you solutions could be also something, yeah. So for example, if a MFI would come to you, yeah, or Sergey, how you would partner with them? Yeah, so in Bulgaria, we have some MFIs, they want to digitize and they don't want to have all the lessons learned. Yeah,
We are absolutely open, Zilke, to share experience. I think it is buried in our name. We are clear.
Yeah,
so
but
said, not only this, but it means that we do believe that digitalization can create more value. If somebody knocks on our door and if they want to share or to understand or even get a service from us, we are more than happy to do it. Why? In this area where we are now, in the blue ocean that all of us fintechs are swimming, with the banks capturing 95% of the market, it is always 2 plus 2 is equal to 5. How come? Practically, what really happens is that you can argue, is there full digital process in lending? I can argue for clear, yes, we have it. Still, there is some bits and pieces where you can say, okay, it is not fully, you still have something, but it's not because we don't like to do it. It is because the regulator on the institutional framework where you operate kind of insists on it. And I want to step on what Bobby and Ilka said and just give you one thought to think, and probably it's a little bit of a joke. So AI, it's, you know, the bubble thing, everybody's speaking about it, it's crazy stuff, people will lose their jobs, you know, money will start to grow on the trees and everybody can collect, etc., etc. At least for me, we are not still there. Why? You know, this financial stuff we are talking about, it's crucial for every economy, for every market. So you need to be very attentive when a process, in these processes, how you're going to lend and how you allow this to happen automatically, and make sure that all the stakeholders involved are kind of, how to say, aligned on this. So I think it's the right approach. Regulators need to really sit down and rethink the way AI can influence the model of scoring and granting money. It can automate for sure, make it fluid, sure. And the joke side, we have a founder who said, Sergey, back in the days we were doing scoring and we wanted to check if the how is this called, the signs that you have under the stars, you can apply it. Let's say if you're a Leo or a Libra or whatever, can apply to your scoring or to your risk. So they took it and they kind of, you know, checked and did the big data analysis.
I have a question for that. I have a question.
But there was no relation. I just want to say, okay,
so Lifestyle.
Something,
So I
yes.
have a question from the chat, which just to make the dot lifestyle. Yeah, I usually feel fintech app that are into microcredit are into consumer loans, lifestyle and entertainment loan, and not impacting those at the bottom of the pyramid. I may be wrong though. So what do you say about that? Yeah, so that's
I can,
more like
yes. I can quickly say you
Yeah.
can add, but our company is only funding corporates. So whether it's just micro SME, it's only corporates. And the product we do for micro, it's for businesses. So the businesses they use, it's the limit they need to buy some tools, they need whatever they want to do in the micro segment. But it's only for that, and it really has effect on the other company.
So, so if there's a fintech app on corporates, but probably the nano loans, of course, in Kenya is also for lifestyle and entertainment, Tana, huh? Or not?
And they're basically they're for consumption as well, right? So for example, you get $1,000, for example, as a loan from a micro lender without a collateral, or maybe based on data, things like that, right? So the customer gets the loan, then it depends where they're utilizing the loan. Either they're buying something, they're using it for health purposes and things like that, right? So it's basically a consumable loan which they can consume in any form which they want to use it.
Okay, but it's also a different reality in Africa, where generally population do not have access to financial services. Yeah, so their microfinance is broader in it. And Sergey, lifestyle, do you do lifestyle and entertainment at Clear?
Yes, we do have a buy now, pay later product. And I think the question is spot on. I think the app that the person saw is perfectly marketed to the right place, because usually when you're a consumer and opening an app, financial app, usually what you see is something that is targeting you as a customer. In terms of microcredit provision, where our proposal goes is where the micro businesses thrive. So usually you don't chase those in their personal apps, you chase them on the platforms where they operate. A very, I would say, successful example is Shopify, which is a platform for e-commerce stores, where they provide lending based on your turnover on Shopify. And you are, how to say, entitled only if you reach to a certain threshold.
Okay.
So you don't see it in your usual end-to-end experience. You see it as a business owner once you reach the threshold. So I think...
Yeah, so we are 1 minute before the end of the session, and I'm German. So maybe what is important, the message is, of course, we don't want to do social washing. No, we have the screen washing, but social washing means I have a microcredit app, and of course, Ilka, you don't do that because you are lending to corporates, but to be transparent also, yeah, if I have a fintech app, declared microcredit, that there's a business app, there's a consumer app, etc. So thank you very much. It was a very lively discussion, and we also realized that already in the preparation. So of course, we have seen internationally there's not anymore a trend, it's a market reality. Yeah, so digitalization, fintech, AI are market realities, and it has to be dealt one. Then we have seen 2 companies, we discussed it, from the north, from the southeast of Europe. Yeah, peers of peer-to-peer, or cousins, you mentioned a little bit. Yeah, so there are a lot of similarities, but also distinctive factors. And what I also wanted to say, the offer for the microfinance industry, so all the lessons learned, Clear and Bauers have done. So it would be great that the industry can capitalize on that. No, it will be too expensive to go digital and learn all the lessons as microfinance institutions. So it would be nice, the offer that maybe also MFC can support that, to have, to help microfinance to develop further. So we are also we are not yet through with the social finance vibe, and I have to say that we have a session ongoing, engaging youth in social finance, and also practitioner insight session, EU funding crossroads, security, competitive and future of MSME, just after us. And I'm back for alternative funding models a little bit later this afternoon. And I thank all participants, all speakers for this very nice session.